All right, welcome to a new deep dive. Today we're tackling a company that's been on, well, a bit of a wild ride. One specifically flagged for a closer look based on its recent performance and transformation. We're slicing through a stack of sources you brought us on Sezzle Inc.
That's right, SEZL on the Laze Q. And yeah, your sources give us a really comprehensive picture, covering their business, their financials, who they're up against, and crucially, offering a different lens to view their performance using a specific quantitative intelligence approach.
Yeah, that's where it gets really interesting, I think. Our mission for this deep dive is to figure out what makes Sezzle tick right now. We'll unpack their recent turnaround, look at the market they're in, dig into the numbers, check out the stock's dramatic moves, and then explore how that quantitative analysis sees things differently.
Exactly. We're aiming for those aha moments, giving you a shortcut to being well-informed about this company and maybe shedding light on different ways to analyze opportunities in the market.
Okay, let's jump in. First off, just the basics. What is Sezzle?
Okay. At its core, Sezzle Inc. is a financial technology company, fintech, operating in the buy now, pay later space, BNPL. Based out of Minneapolis, they provide a platform. Basically lets consumers take a purchase and split the cost into interest-free payments over time.
And their mission isn't just about the payment plans, right? I saw something different about their stated purpose.
Absolutely. A really significant part of Sezzle's identity is their emphasis on financial inclusion. They aim to serve consumers who might be unbanked or underbanked. And it's more than just words. Since June 2020, they've been a public benefit corporation, a PBC.
A PBC?
Yeah, that's a legal structure. It requires them to balance making a profit with creating a positive social impact.
That's a key differentiator, trying to formally blend profit and purpose in fintech. What about the flip side? Why do businesses, merchants, partner with Sezzle?
For merchants, the pitch is pretty clear. It's results-driven. Offering Sezzle at checkout is designed to increase sales, boost conversion rates,
Turning browsers into buyers.
Exactly, and lift the average value of each order. It just makes it easier for customers to say yes.
And for someone listening, why is understanding BNPL and a company like Sezzle relevant? Maybe you use it, maybe you just follow the market.
Well, BNPL has fundamentally changed how many people think about paying for things, especially younger generations.
Yeah.
Online, even in stores sometimes. It's a major trend in consumer finance. And looking at a company like Sezzle, particularly with that PBC status, it shows how companies are trying to build social goals right into their business model, which is an interesting trend in itself,
Makes total sense. Okay, let's trace their path a bit. Sezzle wasn't always just BNPL, right?
Right. They started up in 2016 and, like a lot of startups, explored a few different payment ideas before really zeroing in on and launching their BNPL product in the US back in 2017.
And then things started picking up speed.
Definitely. 2019 was a big year. They expanded into Canada, did an IPO on the Australian Stock Exchange, the ASX, to fuel growth. By 2020, they hit over 1 million active customers. And that's also when they made that shift, becoming a public benefit corporation.
And a pretty massive partnership landed in 2021, I remember.
Yes, partnering with Target Corporation, that was huge validation, expanded their reach significantly within U.S. retail.
I recall news about a planned merger a couple of years back, something that didn't quite happen.
You're thinking of the proposed merger with Zipco, another BNPL player, announced early 2022, but by the summer, it was called off.
Why was that?
The sources mentioned challenging market conditions at the time, and both companies kind of revising their strategic priorities. That was the main reason cited.
Okay, so the merger didn't happen, but then came a strategic decision to double down on North America.
Exactly. In August 2023, they made a strategic move, relisted their shares directly onto the Laze Q. This essentially consolidated their focus on the North American market, made them more accessible to U.S. investors.
And that seems to coincide with a period of really significant change for them, looking at the timeline.
It does. The sources highlight late 2023 into early 2024 as a remarkable turnaround. They achieved consistent profitability, which is, a major hurdle for many growth companies, and saw a real acceleration in their growth metrics, something that was front and center in their recent Q1 2025 report.
Okay, so they've navigated challenges, now apparently profitable and growing fast. How does the actual Sezzle platform work? What are the specific services?
Well, their flagship offering is the installment plan. The most common is the Pay in 4.
Pay in 4?
Right. Think of it like this. You buy something, Sezzle splits the cost into 4 equal payments. You pay the first one at purchase, usually. Then the other 3 are spread out over 6 weeks, typically every 2 weeks.
And the key appeal is, it's interest-free.
That's right. On their core Pay in 4 product, as long as you make your payments on time, no interest. They do have some longer-term options for bigger purchases, and those can sometimes involve interest, but yeah, the core attraction is that interest-free structure.
So if the consumer isn't paying interest on the main product, how does Sezzle actually make its money?
Good question. Their primary revenue comes from transaction fees, paid by the merchants.
The merchants pay.
Yeah. Sezzle gives businesses the tools to integrate the payment option online via APIs, plugins, maybe even physical stores. The merchant pays Sezzle a percentage of the transaction amount, plus usually a small flat fee.
Got it. The merchant pays for the service that helps them sell more. Makes sense. And they have tools for the consumer side too.
Yeah.
Beyond just splitting the payment.
Yes, definitely. Two interesting ones mentioned are Sezzle Up.
Sezzle Up.
Yeah, customers can opt in to have their on-time payment history reported to credit bureaus. That directly supports their financial inclusion mission, right? Helping people build a credit score.
That's interesting. Connects back to the PVC thing.
Exactly. They also mentioned offering flexible rescheduling options, trying to be consumer-friendly, help users avoid late fees if possible.
What about expanding where you can actually use Sezzle, not just partnered merchants?
Yeah, they have premium options for that. Sezzle Premium is a subscription, offers benefits like higher spending limits, maybe fee-free access to Sezzle Anywhere.
Sezzle Anywhere.
It provides a virtual Visa card, lets you use Sezzle at a wider range of online stores, even if they aren't direct partners. There's also a one-time option, Sezzle On Demand, which has a small service fee attached.
How do they figure out who gets approved? Is it like applying for a traditional credit card?
Not exactly. They use what they call a proprietary credit assessment system.
Proprietary.
Look, it's a soft credit check, so it doesn't ding your credit score. But more importantly, it looks at multiple data points, not just your traditional FICO score. It includes your payment history with Sezzle.
So they use their own data.
Right. This is crucial for their financial inclusion goal. It allows them to potentially approve users who might have limited traditional credit history, but show responsible behavior on their platform.
That makes sense. So if you listening have used other BNPL services, how do Sezzle's specific features stack up? Does that focus on financial inclusion or the credit building option make a difference to you?
Interesting points to consider. So with all these features, who is actually using Sezzle?
The sources paint a picture of two main customer groups, right? Consumers and merchants.
Yeah. On the consumer side, it largely skews younger. Gen Z, millennials. They're often drawn to the transparency, the interest-free structure, the control over payments, and like we said, the unbanked, underbanked, or those actively trying to build credit are a key part of their user base. Sources say millions of active users.
And the businesses using Sezzle, what kind of merchants are we talking about?
It's a pretty diverse network, both online and brick-and-mortar stores, across various sectors, fashion, health, home goods, you name it. The latest number mentioned, Q1 2025, was over 47,000 active merchants.
And merchants are signing up because Sezzle helps them sell more, right? Potentially increasing average order value, bringing in customers who preferred this payment method.
Precisely. It's about boosting their own business performance by offering flexibility to their customers. It's a tool for them.
All right, let's talk about the part that's probably caught a lot of attention to their financials. You mentioned a remarkable turnaround. What do the numbers from your sources actually show?
Yeah, it's described as a significant financial transformation, and the numbers back it up. Look at Q1 2025. Revenue hit $104.9 million.
Okay.
Now, compared to the same quarter the year before, that's a jump of 123.3% year over year.
Wow, 123%. That's
extraordinary acceleration, especially when you compare it to their full year 2024 revenue, which was around $299.7 million. The pace picked up dramatically.
123% increase isn't just growth. That's explosive growth for a company their size. And the big shift wasn't just revenue, but profitability, man. That's key.
Absolutely crucial. For Q1 2025, they reported GAAP net income of $36.2 million. That's $1 per diluted share.
Net income, not just revenue.
Net income. And that represents a staggering 286% increase year over year. This shows they've moved from just growing the top line to generating significant profit. It's a major inflection point.
And are the margins looking healthy? Does it seem sustainable?
Very healthy. Their adjusted EBITDA margin was 49% in Q1 2025.
49%?
Yeah, that signals excellent operational efficiency. It suggests the business model can scale profitably. Gross margin was also robust at 70.4%.
Okay, strong margins. What about the sheer volume of transactions, the GMV?
Gross merchandise volume, or GMV, reached $808.7 million in Q1 2025. That's up 64.1% year over year. So confirming strong and accelerating adoption, lots of transaction volume.
Look at their balance sheet. Do they have the cash to support this growth? Handle bumps in the road?
Yes, the sources indicate a solid position. As of the end of March 2025, they had $88.89 million in cash and short-term investments. And Investing Pro data noted a healthy current ratio of 2.44, indicating good short-term liquidity.
Okay, so solid footing. And all this good news led to management feeling pretty confident about the rest of the year, I gather.
Definitely. Following that strong Q1, they significantly raised their guidance for the full year 2025.
Raised it. By how much?
Substantially. They now expect revenue growth of 60-65%. That's up from the previous forecast of 30-40%.
It's a big jump.
Huge. And net income guidance was boosted substantially too. Now $120 million, up from an earlier $80.4 million. EPS projected at $3.25. Raising guidance that much, it's a strong vote of confidence from the leadership.
So for you listening, looking at these numbers, what story do they tell you about SEZL's recent performance? I mean, how rare is a 123% revenue jump coupled with a massive 286% increase in net income?
It's definitely not something you see every day, especially in a challenging market environment. But speaking of the market, they aren't the only ones playing in the BNPL sandbox, are they? Competition must be intense.
Fierce is an understatement. The sources describe the BNPL landscape as highly dynamic, fragmented, and intensely competitive. They're up against rivals from all sides.
Like who? Who are the big players?
Well, you have the other pure-play BNPL companies like Affirm and Klarna, major international players.
Right.
Then you have the tech giants and payment processors who've integrated BNPL. Think Block with Afterpay, PayPal with their own Pay in 4, even Apple Pay Later.
And you can't forget the traditional banks getting into the game.
Exactly. Banks are increasingly offering their own installment options, sometimes leveraging their huge existing customer bases. Plus, there are always smaller, emerging players trying to carve out niches.
Okay, so in that kind of battlefield, how does Sezzle aim to stand out? What are their differentiators?
The sources circle back to a few key things. That public benefit corporation status and a clear focus on financial inclusion, especially the credit building aspect with Sezzle Up.
Okay, the mission.
And their transparent, interest-free core model is also key. But to succeed against giants, it really boils down to factors like achieving scale, expanding that merchant network, keeping fees competitive.
And critically,
having very effective credit risk management. That last one is huge in this business.
Yeah.
One bad turn in the economy and...
Yeah, that can sink you fast if you're not careful.
So why is this market so competitive right now? And how do Sezzle's specific differentiators, like being a PBC or focusing on financial inclusion, really help them compete against giants like PayPal or Apple who already have massive user bases and deep pockets?
It forces them to be very targeted, right? They have to rely on those specific value propositions resonating strongly with their chosen audience. They can't outspend everyone.
All right, let's switch gears and look at the stock itself. SEZL, its price performance has been, well, nothing short of dramatic recently.
Dramatic is putting it mildly. As of May 29th, the price was around $109.15, market cap around $3.71 billion. But just look at the 52-week range. It's been from roughly $11.20 to $112.85.
$11 to over $112. Wow. That's a significant move, an incredible run.
It is. The sources highlight extraordinary price appreciation and very high volatility. The stock is up about 875% in the last year.
875%.
And a staggering 137% just in the last 3 months, trading right near its all-time and 52-week highs.
That kind of run just screams high volatility, doesn't it?
It absolutely does. The beta coefficient is 3.87.
3.87. Explain that.
So a beta of 1 means a stock moves roughly with the market. A 3.87 beta means SEZL tends to move significantly more than the market. Almost 4 times as much on average. That translates to potential for those huge gains we've seen, but it also puts you squarely in the path of equally sharp, rapid declines. High risk, high potential reward territory.
What are the analysts saying about the stock after this massive run and those stellar Q1 financials? Are they still bullish?
Based on recent coverage summarized in the sources, yes, the consensus is overwhelmingly buy or strong buy. Price targets mentioned are generally in the $110 to $120 plus range, with some analysts projecting even higher.
So still seeing upside even after the huge runoff.
Apparently, the sentiment is clearly driven by that return to profitability, the accelerating growth, and management confidently raising guidance.
Okay, let's look at the technical picture from the sources. What are the charts and indicators telling us about the recent price action? Is it confirming the bullishness or flashing warnings?
It's kind of both, actually. The technical analysis shows a very strong bullish trend is definitely in place. All the key moving averages, the 10-day, 20, 50, 90, and 200-day simple moving averages, they're all positive, all trending upwards.
Okay, so strong underlying trend confirmed. Powerful momentum.
Exactly. Robust long-term trend.
Yeah. But where does the warning come in?
It's indicators that measure how quickly and how far the price has moved recently, like Bollinger Bands and the RSI, the Relative Strength Index. The sources flag these as very positive, but with extreme overbought warning.
Extreme overbought warning, okay.
This means the price is likely trading well above its typical range, probably outside the upper Bollinger Band. And the RSI is likely deep in overbought territory, maybe above 80. While this shows intense buying pressure, it's also a classic technical signal that the stock is overextended, stretched thin.
What does overbought typically imply for a stock's near-term prospects? What's the risk?
It significantly increases the probability of a near-term pullback. Or maybe just a period where the stock price moves sideways, consolidating to relieve that intense buying pressure. Doesn't mean the trend is over, but suggests a pause or correction is more likely.
Any other technical signals mentioned?
Yeah, the TTM squeeze indicator likely fired off to the upside, which indicates a strong directional move out of a period of low volatility consistent with the big rally. And the MACD, another momentum indicator, is showing a very strong bullish signal, confirming buyers are firmly in control right now.
So putting the whole technical picture together then, what's the summary?
The overall technical sentiment described is very positive, but, and it's a big but, with extreme overbought warning. The trend is undeniably strong, fueling that massive rally. But those overbought signals are loud and clear. The sources emphasize that despite the strong trend, the risk of a sharp near-term pullback is significantly elevated due to this overextension.
So what does a beta of 3.87 really mean for you specifically, as someone looking at the stock? And how do you even begin to balance incredibly strong fundamental news and positive analyst ratings with technical warnings like extreme overbought? That's a tough spot.
It's the classic tension in the market, isn't it? Great story, great numbers, but the price has run so far, so fast. It really forces you to think hard about your own risk tolerance and your investment time horizon. Are you playing the long game or looking for a short-term trade?
And speaking of navigating this, how does the leadership team evaluate based on these horses? How have they managed through the turnaround and this volatility?
The management team, led by CEO Charlie Youakim and President Paul Paradis, gets pretty high marks in the source material, described as demonstrating highly effective strategic execution.
How so? What specific actions?
Well, they successfully navigated the fallout from that terminated Zip merger. They strategically pivoted with the Laze Q relisting, focusing on North America, and crucially achieved that exceptional operational execution, leading to the dramatic financial improvements we discussed.
Like the profitability.
Exactly. That involves tight underwriting, efficient merchant acquisition, keeping costs under control. It's disciplined execution.
And their commitment to that PBC mission. Is that seen as a plus or a distraction?
It's noted positively that they are effectively balancing their public benefit corporation status with achieving strong financial results. That requires a careful hand, blending purpose and profit. Their sound capital management and the decision to significantly raise 2025 guidance are also highlighted as signs of effective, confident leadership.
But even a strong team faces headwinds, right?
Yeah.
Especially in this market. What challenges are called out?
Absolutely. The sources list several significant ongoing challenges. Intense competition from much larger players is constant. That's not going away.
Right.
Navigating evolving regulatory frameworks for consumer lending, this is highlighted as a substantial overarching risk for the entire BNPL sector. Big uncertainty there.
Regulation is always looming.
Always. Maintaining credit quality, especially if there's any economic downturn, is paramount for sustained profitability. That risk management piece again. Integrating new technologies like AI for efficiency is necessary just to stay competitive. Plus, the stock's current, extreme valuation means execution needs to be near perfect to live up to those high market expectations. Any slip-up could be punished severely.
Yeah, expectations.
Very high. And finally, they have that dependence on attracting and keeping merchant partners. Merchant churn is always a risk.
So, Thinking about that leadership team's track record, how does that influence your view of how they might handle these specific challenges going forward? And how significant is that balancing act between the social mission and profitability in the long run for sustaining value?
It's definitely a delicate balance. Their recent track record is impressive, but these challenges are real and ongoing. Sustaining this performance won't be easy.
All right, let's look ahead then. The price prospect based on the sources. What's the overall outlook they present, balancing the good and the bad?
The price prospect is summarized as highly promising fundamentally, right? Driven by that dramatic turnaround, the profitability, the growth. However, it's immediately qualified with significant short-term risks because of that explosive rally and the very high volatility we discussed.
So, promising but risky. What are the key positives they point to as tailwinds pushing it forward?
The fundamental shift to sustained and accelerating profitability is the biggest one. That changes the whole investment story. The accelerating growth in both revenue and GMV shows strong business momentum is still there. Bullish management guidance reinforces that internal confidence. The BNPL market itself, despite competition, remains relevant and growing, especially among target demographics. And SEZL's specific focus on financial inclusion could provide a durable edge with a loyal customer base. Plus, being profitable gives them better resources to scale and compete.
Okay, those are strong tailwinds. What about the risks or potential headwinds holding it back?
Intense competition, especially from well-capitalized giants like PayPal, Apple, Block. That's a major threat. They can subsidize BNPL more easily. Regulatory scrutiny is arguably the biggest sector-wide risk. A crackdown could change the economics entirely. Credit quality management is essential, always, but especially if the economy weakens. The extreme valuation we mentioned, the high PE ratio, implies future growth expectations are already baked in, making it vulnerable to disappointment. And they rely heavily on those merchant relationships. Losing key partners would hurt.
So putting it all together, the overall price prospect from the sources is, what's the bottom line?
Positive to cautious. Very positive, with high volatility and short-term pullback risk.
Okay, unpack that a little.
The underlying business transformation is strong, making the long-term picture look compelling if they keep executing. But the technical overbought conditions and inherent volatility mean there's a high probability of a sharp near-term pullback or consolidation. The near-term is risky, even if the long-term looks good fundamentally.
Given all that, the high potential, the high risk, the dramatic run, what part of this analysis resonates most with you listening? Does this kind of balance fit your approach, or does it feel more like navigating a minefield? Lots to think about there.
It's definitely a fascinating case study in market dynamics. High growth meets high volatility. And speaking of analyzing performance, this is where one of your sources introduces a completely different way of looking at Sezzle's story, a quantitative way.
Ah, yes, the section titled Redefining Alpha. How Quant Intelligence Outpaces Buy and Hold. This is where we look at SEZL through the lens of a specific analytical model, powered by what the source calls Quantitative Intelligence, or QI.
Precisely. This isn't just looking at PE ratios or drawing trend lines. It's a machine learning model applying this concept of quantitative intelligence, QI, specifically to how SEZL stock has actually traded.
And the comparison it presents between that model and just buying the stock is pretty stark, right? Yeah.
It is. Really stark. The source gives an example. Imagine investing $10,000 in SEZL over the period they analyzed. A traditional buy and hold strategy would have yielded a very solid 731% return on investment. Not bad at all.
131%, pretty good.
But according to the source's analysis, the machine learning strategy powered by this QI yielded a staggering 1,679% ROI.
1,679% compared to 731.
Yeah. That's an improvement of 130% over just simply buying and holding the stock.
Wow.
Right, and they emphasize this isn't just theoretical backtesting, it's presented as a performance record achieved by this specific strategy during that period.
Okay, so how does this model supposedly achieve that kind of leap? It is clearly not just blindly riding the wave up if it outperformed buy and hold that much.
No, the source explains it operates differently. It learns and adapts. It uses rigorous decision logic based on continuous feedback and historical context. They call it intelligence trained with purpose. It's designed to target outperformance, what they call alpha, and suppress market noise, the random fluctuations. It's not just reacting to price movements, it's trying to interpret the underlying market dynamics.
And how does it handle the kind of intense volatility we just talked about with SEZL? Those sharp corrections, the huge surges, that seems like the hardest part.
That's where the source claims the model's advantage lies. They point out how confusing SEZL's chart can be. Sharp drops, huge rebounds. and how traditional indicators can give conflicting signals. Maybe RSI screaming overbought at the same time SED is flashing bullish. What do you do then?
That's a real dilemma for a human trader trying to interpret it in real time.
Exactly. The source says the ML model is designed to survive the storm by adapting. It doesn't freeze up. It's programmed to cut losses when its logic dictates, reallocate capital based on its analysis, and crucially, compound gains during favorable periods. They specifically mention using signals like trend shift and breakout oscillators.
Trend shift and breakout oscillators.
Yeah.
What do those do?
The idea is they're designed to identify subtle shifts in market direction and also periods of compression before release, basically spotting potential big moves before they happen, whether up or down.
So the decisions are based on statistically validated signals, not gut feeling or trying to predict the next news headline.
That's the core idea presented. Executing buy and sell signals derived from statistically validated indicators, not emotion or narrative. The source says the model doesn't just react, it prepares. It anticipates based on patterns.
This whole concept of quantitative intelligence, QI, how does the source define its edge? What makes it different?
As defined in the source, it's presented as a holistic framework. It combines advanced mathematical reasoning, statistical modeling, deep domain expertise understanding the markets, and an algorithmic discovery engine. It aims to understand patterns, interpret uncertainty, and constantly adjust through feedback loops. It's trained on a wide array of data points beyond just price, things like market context, shifts in trading volume, changes in volatility, and indicators across multiple timeframes.
So a lot more data than a human can process easily.
Presumably. And they do note there's human oversight and refinement involved too. It's not just a black box operating entirely on its own.
Leading to what result? What's the output?
A dynamic strategy engine. One that aims to deliver predictive insights and tactical execution, making trade decisions aligned with specific portfolio goals, like maximizing risk-adjusted returns.
That comparison between buy and hold and this quantitative strategy is pretty compelling, especially using a stock as volatile as Sezzle as the example. How does seeing this kind of analysis change how you think about looking at performance? What does the idea of a model specifically built to adapt to volatility mean for navigating today's often turbulent markets?
Well, it certainly highlights that there are fundamentally different paths one can take, right? Different ways to analyze and approach the market. Each has its own logic, its own potential outcomes, its own risks. It's not just about picking good companies, it's also about the strategy you use to trade them.
We've covered a lot of ground in this deep dive. We've taken apart Sezzle's journey from, a struggling company just a couple of years ago to one showing dramatic profitability and accelerating growth now. We've navigated the complexities of the competitive BNPL landscape, looked at the stock's extraordinary but highly volatile performance through traditional fundamental and technical lenses.
And then, importantly, we introduced that unique perspective offered by the quantitative intelligence analysis provided in your sources, showing how a different analytical approach yielded a significantly different historical performance record for this very same, very volatile company.
It really underscores that understanding a company like Sezzle, especially one in such a dynamic sector and with such a roller coaster stock history, involves looking at its fundamentals, its market context, and potentially exploring completely different analytical frameworks beyond what's typically discussed on, say, financial news.
Exactly. Sezzle is a fascinating case study. Rapid business transformation, impressive operational execution, navigating a hyper-competitive market, dealing with extreme stock volatility, and also serving as a really interesting example for these advanced quantitative analytical approaches. It touches on a lot of themes relevant today.
And that source leaves us with a thought about quantitative intelligence, suggesting it offers a path that mitigates risk, adapts in real time, and uncovers asymmetric return opportunities others miss.
So the question for you is, considering Sezzle's volatile history and rapid ascent, how might integrating different analytical approaches, both traditional and quantitative, empower your understanding and decision-making in these dynamic markets? Is simply buying and holding enough, or is redefining alpha, as the source puts it, necessary in today's environment?
Something to definitely think about. And speaking of looking ahead and diving deeper into these analytical approaches, that same source mentioned something else we'll explore in a future deep dive, didn't it?
Right, they did. They noted that we'll be breaking down the exact indicators behind how these models detect those trend shifts we mentioned earlier, and how you might potentially interpret similar signals in your own analysis.
Okay, that sounds like a really practical look under the hood of some of these quantitative concepts, moving from the what to the how.
Exactly. It should be a fascinating deep dive into the mechanics dynamics behind identifying those potential turning points in the market.
We definitely look forward to bringing you that discussion soon. Thanks for joining us for this deep dive into Sezzle.